Data business EBITDA was at 1,041 crores, witnessing a growth of 3.6% year on year. Margins improved by 10 basis points on year-on-year basis and came in at 32.2%. Profitable growth in core connectivity and reduction of losses in incubation services is a primary driver of this strong margin. To conclude my remarks, I would like to reiterate that the improvement in the business environment, Tata Communications has started to see a recovery, and it further bolsters our belief that we will grow at a faster pace as conditions further improve. We are implementing strategies to maximize our potential and continue to invest in the future of the company. Before I end, I have a announcement to make. I would like to announce that Vipul Garg has decided to pursue opportunities outside of Tata Communications. Vipul has been with the company for the last more than 5 years, and he has steered investor relations along with various other responsibilities. Most of you know him on a first name basis. During his tenure, he has built a strong IR framework, helped onboard marquee investors, and played an important role in communicating Tata Com strategy to the outside world. I'm sure Lakshmi joins me in thanking him for his contributions, and we wish him well and all the best for his future endeavors. That brings us to the end of the management committee. Let me hand over the baton back to Vipul to open the forum for any Q&As.
Thank you, Kabir. For anyone who wants to ask a question, please raise your hand. There is a raise hand icon on the right side of your screen, and we will take the questions one by one. We'll just wait for a minute for queue to assemble. Okay, the first question is from the line of Ritesh Gandhi of Discovery Capital. Ritesh, your line has been unmuted. You may ask your question now.
Sure. Hi, sir. Just had a couple of questions. So, our revenue growth has obviously been slightly lower, as you had indicated. Just wanted to understand, is this all due to effectively the exceptional items of, say, COVID and the chip shortage, and then therefore, as the things are normalized, do we see some amount of bunching where we will see higher actually growth happening in Q4 onwards? And just wanted to understand if these were all driven by actually external issues, or if we also were slightly aggressive in the way we were thinking the revenue growth was, how's that going to play out?
No, I think there are a few. I think we have, in terms of our reading of the industry and the way we participate in it, I think we are quite confident that we will participate in the industry digital transformation. And our portfolio, we are continuing to strengthen and build to ensure that that participation will only, yield the necessary results. In terms of the growth, I think quarter on quarter, if you look at that 2% or 1.7 and 3%, it points all to the right direction. And as I called out in my commentary, a lot of these revenue uptick has come both from the wins as well as better management of churn and a tighter management of the accounts are yielding these. Now, COVID has had an element to play, especially in the usage services and the broader chip shortage and our the OEMs. Elongated delivery periods is slowing down the conversion of orders into revenues. That is also playing a part. And there is also a part of, in terms of us accelerating now our ability to have more feet on the ground in various geographies where we will look to, and the attrition hasn't helped. But we are hiring people to support that and increase our sales and solutioning capability. So all of that. So I would say a large part is external environment. And internally, we are strengthening the product, and we will have to invest more on the sales and marketing and solutioning engine, which is what we are committing to do now in order to improve the growth scenario.
Got it. Understood this. So, and the other question was, I just wanted to understand from a group level perspective. Obviously, you've got a number of entities in the Tejas and effectively Tata Tele, and you guys obviously all sort of focus on the digital outlays and growth. and there's also obviously a lot of cross directorships between these entities. So just wanted to understand, is there anything that you guys are looking at from a group level? How should we be thinking about how the Tata Group is looking at it, and the Tata Communications and that entire picture of things?
No, I think the group is very committed. I think the commitment was shown when the majority stake in Tata Communications was taken, and investing further in the sector. So Tejas is one such investment, which is an OEM, and they made that investment with a clear strategy to have a bigger role and play in the scheme of things as 5G comes into play. So I think at a group level, yes, there is a design to see how we can exploit the synergies between various entities. So that would be the view from the group level. But as far as Tata Communications is concerned, I think we will keep our head down and make sure that we can deliver on our strategy while exploiting any synergies available between the group companies, which we are doing.
Got it. And earlier we had some little discussion around potentially acquiring the SME business of the Tata Tele. Is that still something which we are looking at, or is that not right now on the card?
No, I think it would not be right to comment, and all I would say is we are looking at all avenues for growth. Obviously, if there are synergies to be had, we will look at it more closely, and we will let you know at an appropriate time. But from a growth perspective, currently we are investing in products, we are investing in our sales and marketing, and we will also look at other opportunities, even if it is inorganic. As we called out, now we have the strength to be able to do that. So all those options are available for us.
Good. Thank you so much, sir, and all.
Thank you, Ridesh. The next question is from the line of Sanjesh Jain of ICICI Securities. Sanjesh, you may please ask your question now.
Yeah, good afternoon, and thanks for taking my question. A couple of them. First, on the core connectivity side, last 2 years, I think core connectivity has done quite well. Even in the COVID year, core connectivity has delivered a 7% growth, 6 to 7% growth. And now we were in an unlocking stage. We were looking of more traffic growth as people go back to the office, and a 1% growth on a YOY basis, where cloudification is rising, where digital economy is rising. Can you just help us explain what's going on core connectivity side and why it's suddenly underperforming on the growth?
Oh, I think overall, from an industry perspective, if you look at the core connectivity is slated to be flat or even decline. And in that market, we are showing growth on the back of, especially in India, with more data center connectivities coming, and international also. We are growing. So I think that's the nature of the core connectivity market, and we are performing in that segment quite above the market space. One thing especially to look at is the OTT segment and the cloud player segment, who during the COVID times have invested with us, which is what yielded us a bigger growth last year, in increased capacity. And those capacities are yet to be utilized fully, because nothing has changed in terms of a further improved capacity to be utilized. Right? So those capacities are still under play. So I think that's the overall environment of the core connectivity, and I think we are doing quite well in that environment of core connectivity. Of course, the next-gen connectivity, which is all internet-based and on-demand based and so on, which is where we are seeing that enterprises will grow as they expand their footprint and open offices or look to see how to enable people from working from anywhere. And that portfolio has grown quite well, as I called out.
Got it. Last quarter, Lakshmi called upon a possibility of or an ambition to see the pricing angle in core connectivity to drive the growth.
Yes.
Any more color you want to add on that?
No, that is something we are still looking at. I think I called out that the demand supply economics doesn't support the pricing to be continuously declining, and we are still looking at it. We hope to come back with a design and start acting on it in the coming quarters.
But is there, because I think in last year, some of your commentary, you did mention that there could be higher growth in core connectivity as well. Is there any change in the view for you on the core connectivity side?
No. I think we called out the core connectivity growth in single digits only, right? So
Yeah.
while the market of core connectivity will be declining, which is what the market data we shared during our strategy presentation. So the market in core connectivity is going globally, I'm speaking, is going to be flat or declining. And in that market, we said we will grow in the mid-single digits is what we called out in our strategy. And there is no change from that view.
So we still hold that mid-single digit is possible in the segment.
Yes.
Second, on the collaboration side, even on the low base, it's declining on a YOY basis. So that takes care of seasonality. What's going on the SIP side, and how big is it? And we thought you were anticipating even growth in the SIP. Any view change in the collaboration side on the SIP particularly?
No, I think on the SIP, as you know, is a large part of our collaboration. I think it's been impacted by a few things. One is the rationalization of the usage itself as people continue to work from home, and it's been a seesaw from home to office kind of a situation. And even when people went to office, they continued to use the regular home working models rather than using the SIP. So there's some rationalization happening on the usage, which caused SIP to, I think that is a structural shift. And also we had company-specific issues as a result of the IUC increase that we called out. And because of that rate increase that we had to do, there have been specific issues with customers and therefore a decline in the traffic. And the third is the seasonality. So all three of them accounted for in Q3. But the first two shifts has been playing out since almost 1 year, since Q3 of last year. We think that this will stabilize as the economy is open and people move to more stable hybrid working environment. Is what our outlook is.
Do you think VoIP can actually keep putting pressure on SIP like what we saw in a voice?
No, I think
can a significant portion of SIP traffic move on a VoIP?
No, see, I think obviously the collaboration and cloud-based platforms, as people move to using more of Teams and Cisco's and Zoom, a lot of revenues that we are calling out under SIP will get bundled under that.
Sure.
Yeah. So
it's better to look at as a segment as a whole, which is underperforming, right?
Yeah. Yeah, that is right, and that is where I think we are hopeful with the Teams enablement has picked up, but even within Teams, and we called out in our strategy that we want to shift in the Teams more to a fixed recurring revenue for fully managed services, as opposed to providing only the SIP underlay for the Teams, right? Which would have also been a purely only a usage based and would have got impacted. Now the growth in Teams show that our ability to then bundle and provide a more holistic solution of Teams, which is on a fixed recurring basis as opposed to just a usage basis, is a good sign. So majority of the Teams growth that we are seeing is largely on a fixed recurring basis, and it's not factored in the usage part to a great extent yet.
One question probably here to understand the shift. In the Teams, we are providing a lot more managed services, and anything in SIP, it's just a connectivity. Do you think when a customer move from purely taking a SIP to a more Teams, will it be a revenue accretive? Because that will speak of how the revenue eventually in the collaboration will move. So only a SIP from there, if a customer transit to say pure play Teams kind of a platform, do you think we will have a revenue accretion, or do you think we will lose out on a revenue in the transition?
We will not lose out on the transition. I think the teams will be largely focused on customers moving from, people having on-site PBX and migrating that to the cloud. And as they move to the cloud, and as they activate their voice, it will be revenue accretive.
So that means once a customer move, we will be a revenue accretive on the team side rather than just selling a SIP as a solution.
Yes.
Next on the transformation side, looks like that if the business is not stabilizing today. And a year back, we saw that FY22 could be a year of stabilization, but I don't think that's happening. So what's an outlook on the transformation business as a whole? Have you changed anything on the transformation business for us?
The TCTS is going through certain customer specific contract issues, and this quarter specifically also had a provision for one of the customers which took the margins down, but barring that, I think it is showing an improving trend. I think it will take a couple of quarters for it to fully turn around, but we remain quite confident that the capabilities that this company has, TCTS, is very niche with a great degree of domain knowledge, automation, and process knowledge, which the telcos world over require as they increase their capex in fiberization and 5G spend. The demands for them will grow. So we remain committed to that business and transforming that business. But the recent run in terms of both the revenue and margins have been due to certain specific contracts which we are working on to see how do we recover and turn this company around.
Got it. Last bit of question from my side. One on the order book, if Lakshmi, you said that last quarter we saw a double-digit growth in the order, large order deal wins. How has been the trend for this quarter on the order side? And the last question for Kabir, on the working capital days, it looks like we have improved significantly in last 3 quarters. Do you think the working capital days, what has been achieved in the Q3 is sustainable over a longer period of time? So these are my last questions.
Sanjesh, on the order book, Q3 has been Q2. We had a good order book. I think some of the order booking has got pushed out to Q4. So the Q3 is more a normal quarter rather than a standout that we had in Q2. So that's the color of the order book. And more on the funnel side, I think the funnel side is stable. The quality of the funnel is good in terms of larger deals in the funnel. Our win rates are improving, but I think our immediate task is to see how to improve the funnel and thereby continue to improve the order book.
Yeah, if you're
on the working capital.
Yeah, let me just pick up on the working capital. Yes, Sanjesh, our working capital progress has been really good. I'm quite delighted with what our collection teams, are doing jointly with our sales support team, and we're bringing in quite an amount of, I would say, process discipline inside the organization, and that's started to show results, as we speak. My DSO days have come down from 56 days to 51. Yeah, so which is a healthy improvement, and it's our endeavor to maintain these sustainable levels. In addition to that, our PDD has come down quite a bit on the back of good collection efforts. So I would say these are a few of them, and a couple more of process efficiencies and hygiene is underway in implementation, and the intent is to maintain and improve from these levels.
Thanks, Lakshmi. Thanks, Kabir, for all the answers, and best of luck for the future endeavors.
Thank you, Sanjesh.
Thanks, Sanjesh. The next question is from the line of Pawan Ahluwalia of Lebanon Capital. Pawan, you may please ask your question now.
Yes, thank you. Some, some of them have been addressed, but one, actually, two questions. So when we look at the kind of sluggish growth in sort of communications, a part of it is due to the structural shift towards potentially more web-based usage. Has that basically played out? So, is that are we sort of done with that, or are we likely to see that be a continuing headwind in the coming years as people use less and less sort of dial-in and more web-based conferencing? That was one question, and the second was, we're seeing from feedback from various IT businesses as well that while the spend by enterprises on software has been pretty robust, the spend on network upgradation, network VAS, etc., has been sluggish, and I'm guessing that is showing up in part in your growth numbers, order book numbers, etc. Any idea on why there is this gap, and over what period of time do you expect this to reverse itself?
Yeah, Pawan. I think the first one on collaboration, I think we discussed it extensively in the earlier questions as well. But there is a structural shift, right, in terms of people using more collaboration software to communicate, collaboration applications to communicate. But the underlying technologies will still be SIP and so on. So that is where our offering of Microsoft Teams and others will play, rather than being able to sell simply a vanilla SIP product to enterprises. So that shift will continue to take place. I think we should be seeing the plateauing out of that. As I called out, our issue has been one because of the industry structure. There's been a company-specific issue with respect to the IUC charges that we had, and so on. And the third is the COVID situation and the people not going back to work and continuing to use from home. I think all three issues we think we should normalize in the coming quarters and should plateau it out. Is what I think.
Okay.
But once that happens and people start to shift to more of the collaboration applications, whether they use Teams or Zoom or Cisco or any of these products, I think that Global Rapid, which we have now currently launched for Microsoft Teams, will come into play. People will shift, because even if people implement Teams, they're not necessarily shifting their PBX to the cloud. So that's a next step that they will do. And as they do that, our collaboration portfolio should kick in. So, we believe that once the SIP trunk sort of plateaus and the decline plateaus, the other ones will start to kick in the collaboration space. Now, with respect to the second question on the IT, I do see that where the enterprises, when they focus on their transformation, their immediate focus on transformation has been on the application side, how to use the data for more analytics and so on. But as they move more and more to cloud, the existing network infrastructure, especially if they want to leverage internet, will have to get transformed, both from a network perspective as well as from a security perspective. The dollar spend might remain flat, but they have to go through a change. And that is the change that we are looking to spot and make use of. And that is why, in our network transformation, in our next-gen connectivity, we are growing. But I think there is a bigger potential to grow even faster as the enterprises start to focus on the infrastructure transformation as they transform their applications and data analytics. And so there is a lag effect, I think, but I'm not able to really quantify it for you as to how much is the lag, because I think that would depend on various organizations and their strategy and the roadmap. Yeah.
And when you say the dollar spend would remain flat, does that then mean that we're basically looking to take share from other network providers who may not be as, who may not have as compelling a VAS offering as us?
Yes, that is what we are, because especially in the international markets, which is where a lot of these transformations will take place. We will be in a challenger position to challenge the incumbents to help the enterprise transform with Tata Communications rather than with the incumbents.
Are we truly different? I mean, because I see all, certainly even in a market like India, right? I mean, Bharti is doing a lot of work in the space. Vodafone has a very strong offering. Isn't it the case that most telcos around the world have invested pretty well in this? So, are we really that much better than Vodafone or Verizon or whoever the competitors are anywhere else in the world?
Yeah, I think especially when it comes to managing the international footprint of customers, we truly can offer a differentiated offer. Our ISO product continues to be fairly unique in the market, where we are able to give service levels on internet. I think that is still very unique. And on the ISO overlay, we are also, and as I called out for one of the customers, the ISO Network Edge, which provides local breakouts through our network edge to connect to the cloud in a more agile fashion. So we certainly have a differentiation when it comes to customers having multi-geography footprint, and that is what we will have to push in the market and stake our claim in that space, and that's what we're doing.
Understood. Thank you.
Thank you, Pawan. The next question is from the line of Hitesh Arora of Unifi Capital. Hitesh, you may please ask your question now.
Thanks for the opportunity. Just wanted to clarify. Just want to clarify on the incubation services. See, we've largely been in the top line here has largely been in the 40, maybe 30, 40 crores, and this quarter it was around 50, 54 odd crores. But we haven't really broken out in this segment, especially compared to the opportunities that we have here. Any comments there? I thought the opportunity set is huge. We should have already, see a much larger growth here, but that somehow seems to be elusive thus far.
See, on the incubation, there are 2 or 3 parts to this. One is the connected solutions portfolio of Move and IoT, and the other is the Net Foundry.
Yeah,
I think as in the overall in the IoT space, while people are talking about it, I don't think the full IoT benefit has been reaped or the enterprises invested that much in IoT as yet. I think we are focused on a few use cases in IoT in worker safety, worker productivity, and then expanding that to more asset in man, machine, and material. On the Move side, and in that IoT, and also the smart street lighting in India, and we are expanding globally as well. So I think the use cases are gaining traction, and we are focused on a set of niche use cases with our IoT fabric opportunities, and that is beginning to gain some traction. On the Move portfolio, I think the breaking out, as you call, we are quite confident will happen as we strengthen our story around the automotive space, expanding our offering to beyond just the connectivity management to delivering other capabilities to autos, right? Like providing the over-the-air updates and so on. So those are still in the works. And thirdly, the other segment is around the semiconductor, which we called out, and that is still work in progress. We have a couple of pilot customers that we have acquired, and that also has a potential to scale. So all of these new use cases that we've called out around Move, we are building out the products and platforms around that. There are pilot customers that we have signed up, but the scaling will happen in due course. It is not in a stage of scale as yet.
Understood. just one last question, more on the financial side. Just to clarify, on the P&L item, there's an other comprehensive income. If Shagir, if you could kindly clarify what is it? There's a loss of, I think, around 4.68 crores. If
Yeah, I'm just.
Yeah.
Normally, a lot of investments that we don't take it through the P&L actually goes through the OCI route. We take it to the reserves either through the P&L or through the OCI. The 4.68 crores, which is there, is basically the foreign currency translation. That is the impact that you actually see in this quarter.
Okay. And would you know the previous number there is 23.515 it corresponds to what?
Second,
I think in the previous quarter there is a number of 23.15. The same head, 23.15 negative. What is that? Again, it's again a translation loss, foreign currency translation loss.
No, there was an investment one. Let me just look into my notes in a minute. Give me, Hitesh, 2 minutes. So last quarter was actually a translation loss, and this quarter was on account of Canada pension plan. Is the translation that we had. So those are the two components for it.
Sorry, could you repeat, please? I didn't get.
Yeah, this quarter we had an FC. I mean, our foreign currency translation was actually a gain this quarter. Last quarter was a loss, but this quarter we also had a Canada pension gain as well. So that explains the FCTR in the OCI.
Okay, thank you. That's all from me.
Thanks, Hitesh. The next question is from the line of Naval Seth of Emkay Global. Naval, you may please ask your question now.
Thank you, Vipul. I have two questions. First, as you had mentioned about increasing traction in MSMEs in your last analyst day. So can you throw some light how has been last 6-7 months since the time we have stated that? What is the level of traction we have achieved? Second, again, in the analyst day, we had stated that there would be a level of debt we would like to maintain. So have we reached that? Is that closer to our target? And as balance sheet now becomes very strong, so what is the strategy on inorganic expansion? Will you, does that take front seat now, or it will be at its own pace as earlier kind of thought about?
Let me take the last two questions first, Lakshmi, and maybe you can talk about the prime segment.
Sure.
On net debt, we had stated as our long-term strategy to be under 2x. 2x is the range that I would like to 2x to EBITDA is the range that we would like to be at. So we were around 1.9, 1.8. This quarter we are at 1.7, and this quarter we had the one-off benefit from various reasons. I mean, little unspent, and therefore you see in the EBITDA line. On our staffing cost, benefit that we've got. I mean, I wouldn't like to call it benefit because of, lower number of people and higher attrition, So that was one of the drivers. We got some tax refund, this quarter, which is another driver. Plus, I also alluded in my commentary that our cash capex, although our approved capex and the outlay that we have approved is in line with plan, our cash capex is lower because of the delayed lead times that we've and chip shortage and stuff like that Lakshmi also alluded to. So those are the reasons as to why we've got slightly better from a cash perspective. And I mean, in the past I have said this to you guys as well. I'm a fan of of a range, and I would like to kind of operate in a range. We have a healthy balance sheet now. Even if we were to take our net debt coverage to 2.5x, we don't breach any of the covenants with our lenders, and that gives us the healthy, room for investment and therefore we create that room on one side. On the other side, we are obviously pushing the business to bring value generating and value creating ideas, and they go through with a tooth comb in terms of the NPV and IRR each of the projects generate, and that's how they are funded. And they are not funded just because there is room in the balance sheet. They are funded on the merits of value that they generate for us. So that's how we would like to kind of, I would say, manage the deadline. So you will probably find in some quarters where our we need to take the right calls. We will probably go a little over our range that we have said, but otherwise we should operate at a healthy level. Answering a question on inorganics, we had called out in our strategy a placeholder for tactical and bolt-on acquisitions, and we continuously monitor and scan the market for looking at opportunities that add value to our portfolio or to our go-to-market organization, either niche or generic. So that is a call that our M&A and the strategy team is continuously evaluating. In the past, our affordability limited our ability. Today, I think that constraint is no longer there. Subject to, of course, the scrutiny of the hygiene of and the value that investment will bring to the table. But otherwise, if I have to give directionally, yes, we are a little more stepped up in our M&A, I would say, scouting than what we were maybe a year or 2 years ago. Lakshmi, do you want to take the
on the question on MSME? I think we called out in our strategy a prime segment, and we said we are going to carve out a unit for addressing this prime segment. Just to clarify, we are not and did not say MSME segment, because these are still medium to largish companies, which we need to serve in a new phygital model, is what we said, a combination of physical presence in the region as well as largely a digital motion through self-serve and everything. We are building out that model in terms of tools for self-serve and digital and bundled products and so on and so forth. We are seeing encouraging signs of adoption in the customers that we have approached in the early stage, but that it'll play out once we pivot to the phygital model with fully digital self-service model, and begin to offer more bundled services and bundled products in that customer base. So it's progressing quite well, and it's too early to call out the results of that specifically.
Got it. Thank you so much for elaborative answers, and all the best.
Thank you.
Thank you, Naval. The next question is from the line of Ali Asghar Shakir of Motilal Oswal Securities. Ali, you may please ask your question.
Yeah, thanks for the opportunity. Couple of questions. First is on this incubation segment. I hear your thoughts in terms of each of the categories and how we are trying to kind of strategize growth over here. Now, this is about 200 crore revenue run rate annually, and we are doing nearly about 400 crores of EBITDA loss here. So I just wanted to hear your thoughts on a probably 3-year out period. Given the kind of overall scale that we have, where do you think this particular business can reach? Across the 3 verticals you have, which is Move, IoT, and the other one. If you can just share your thoughts about, and this 400 crores of loss, at what level do you think this will start delivering profit for us?
So let me first talk about the growth potential in the incubation services. And as I called out, in the Move and IoT, which combined we call it as a connected solution space, we think the potential is really huge. Move, traditionally we had only addressed the auto segment with a limited connectivity management play. Now we are expanding to more use cases within the auto segment itself. And the second segment that we had called out is the semiconductors and born in the born in the cloud, born connected kind of offerings as semiconductors come out and embed their semiconductors into the OEM devices, it will become connected. So that is another one which the product we are building out. So each of these products are we are working with pilot customers and building them out. But in terms of potential, we think there is a very large potential for them, and this can scale quite well. With respect to profitability, we are seeing a decrease in losses, and as these business scale, we will return to profitability. And that is what we have been saying. I'm repeating the same thing again. And we haven't given a specific number at which we will sort of break even. But we are quite confident that we are proceeding in the right direction with reduction of losses.
Understood. The impression we get is this is a business which is still, much ahead of the curve. It's still in, that exploration phase where we are trying to kind of, explain the product to customers and, see the reception. So, I'm just thinking from that point of view that, the kind of investments we have done here, the kind of certainty we have in terms of, of course, opportunity is there, but given that this particular segment is so ever developing, there could be new category, new products, new change, a lot of changes that will bring upon. So the kind of confidence we have in terms of timelines in which this business can really deliver strong profitability.
No, I think the whole idea, when we talked about our strategy, was all our products need to become profitable, right? So we did that scrutiny ourselves, and we are quite satisfied, Ali, that these, the area, if you look at Move, has very strong potential. It is not something that other MNOs are offering. There are other platform players, perhaps like Jasper and others, who do some of what we say we will do. But nobody is there who will do all of what we say we will do. So I think, like you called out, it will be a new category, spanning the connectivity and bringing the data analytics relating to connectivity to OEMs and making a very strong play in their move to connected solutions. So even the connected solutions by itself, like people talk about connected car, connected devices, connected healthcare products, all of them are beginning to play out, and we think that Move will have a very foundational play in that space. So we are quite confident, and as it scales, it'll definitely be the pricing is improving as we shift to the platform and platform-based pricing, and that is what is helping us with scale to decrease the losses. It will become profitable. So I don't want to give out a number at what stage it will become profitable, but we will continue to invest because we are quite confident that this will turn around and yield the results that we are all looking for.
Sure, thank you. This is very helpful. Second question is on our subsidiaries. You did comment on the transformation side of the business where we are seeing, some specific customer related, issues. But if I combine both, let's say transformation business as well as ATM business, both have been laggards for a while now. I think ATM business was under deliberation about, its long-term strategy. So I'm just thinking from that point of view, do these businesses have any restructuring requirements? Are we, contemplating anything over there in terms of, because of the management bandwidth that it would be taking and the losses that they have? It's nearly about combined 10% of our revenue. So, how are we looking at this business strategically?
See, both are very different businesses, and I think we have to them on their individual merits. So I think we've commented on. See, I think the transformation business, the core capability that we have in that business is about a very strong domain knowledge on the network side from a telecom, both on the wired and the wireless side, right? And combined with their automation and process capabilities is what will make them attractive to international telcos. So therefore, from a long-term perspective, we believe that this company can turn around and will turn around. barring the current issues, and it will take a couple of quarters for us to really turn this around and make it profitable. And growth will come because we will make the right investments there to help other CSPs to manage their networks, both fiber and cellular. So things structurally and potential opportunity wise, there is good opportunity. I think this business is going through the short term hiccups that I called out. Whereas on the ATM business again, I think we have commented on it. We are looking to again turn this around with a combination of looking at the business model in terms of the owned ATMs and operating versus a franchise model. And we are seeing the turnaround happening from a changing the business model perspective. The early indicators definitely tell us that that is in the right path. We have again, this business has been hit by both repeated waves of COVID, as well as more recently because of the flooding in some of the states where we are more prominently present in the tier 3, tier 4 regions, serving through the IndiCash brand, right? So we think that two things will shift this business towards better health. One is the business model shift that I talked about, and the second is the macro environment improving, which will enable us to shift the transaction volumes up. We've already seen, the business has had, one uptick from the RBI increasing the rates. So that is a positive direction for this business. So the transaction volumes will pick up in the near future. So while that's our commentary on these two businesses, I think they will turn around. Structurally, they are managed independently with their own boards and so on. So we can re-examine once the business turns around.
Understood. That's very useful. Just one question for Kabir. I mean, you did comment on acquisition. I just have a question on your, investing. You mentioned in growth. Is this going to be more OPEX led, given that you did mention that we plan to hire about 1,000 odd people? And what would be your capex guidance? We have somewhere about 600 odd crores of on an average capex that we've been doing. Now, the kind of cash flow that we throw is quite strong. So, given that we are comfortable with our leverage ratios, how do we plan to use this cash apart from some of the acquisition that you would be exploring?
Yeah, Ali, the investment is investment. Or whether it is OPEX, whether it is CAPEX, I'm indifferent to it as long as they provide the right value and the right justification, go through the right hygiene. So there is no such constraint, from that point of view, and we will do that. We've given, of course, there are contours. We have given contours of our profit guidance, contours of our ROCE guidance. So those are, I would say, the framework within which we will play between OPEX and CAPEX. We've given in the past a guidance of $250 million of CAPEX in a year is what we said we will spend this year. As I mentioned, our cash CAPEX spend may be lower because of various reasons. It's not that we don't want to spend. Our purchase orders are out, but we will just not get them back into the company on time to get them capitalized. So there will be a timing and a phasing issue in this current year. But otherwise, there is going to be definitely focus on increasing that CAPEX. So every lever, whether it is CAPEX, whether it is acquisitions, whether it is innovation, whether it is BAU in terms of resources, to both from a product development point of view and feet on street, I think we are examining each and every one of them to try and unconstrained from a resource perspective, as long as they give us the right return.
Got it. I'm just asking from the point of view that we are throwing, nearly $550 million worth of, kind of operating cash flow.
Yeah.
And so, I mean, that's a very solid number. And even if I take your capex kind of $250 million, there's still a very strong cash, lying on the book. So, I mean, will this be used for deleveraging, or, I mean, kind of increasing your dividend payouts, or, I mean, how are we looking? Because this is like an annually a very strong number that you'll keep throwing every year and hopefully growing this number.
Yeah. Well, our subsea cables will, in a couple of years' time, will start coming to end of life, the ones which we invested earlier, Ali. So it is not about one quarter whether, I get to 1.7x or not. We take a slightly holistic, and a more medium-term view on our capital spends. That's the nature of, our business, especially, I would say, on the core connectivity space. Yeah. And we need to continue to invest, and they will come in certain spurts of investment that we need to make, and we need to provide for that. That's what I would say. Yes, in a quarter it will be higher here and there, and therefore to an extent it will become an auto deleveraging if we don't have investment choices. But long term, I would stick to what I have said before as our guidance.
Understood. Thank you so much. This is very useful.
Thank you, Ali. We're almost out of time, so we are out of time. We'll take the last question from Mihir Sheth of Siganti. Mihir, you may please ask your question now.
Hi, Vipul. Thanks for the opportunity. So just a quick actually question going back to Lakshmi, your original comments on revenue sort of delays and order flow. I understand and appreciate the macro challenges, and I also appreciate that order flow cannot be even through the year. My question is a little bit more qualitative. Like if you were to ask your salespeople in terms of inbound inquiries and the level at which they're busy, is activity as intense as it was, say, 2 or 3 quarters back? Can you just give us some color how things are on the ground from a customer demand standpoint, and how that, because all I'm trying to understand is the direction of where we'll be 6 to 12 months from now, rather than sort of obsessing about the last quarter or the quarter before that.
Yeah. So Mihir, from an activity level, I think the activity levels are quite high and good, right? So even when there wasn't, the customer demand, we are pushing ahead as you would expect in the enterprise business with more proactive proposals and so on. So I think the activity levels are quite good. And I think because of our more proactive approach and trying to engage with the customers with more holistic solutions, the nature of the total size of the funnel, while it has not grown, the number of larger deals within that has grown. And secondly, I think it was good to see that our win rate there, even if it is marginal, has improved, which tells us that we can be competitive and we can compete effectively in those. I think the two things need to happen for us. One is internally ramping up more feet on street and increasing our sales, solutioning, and marketing spend and activities there. The second is the customer side, not just the macro, but the trickle down effect of their digital transformation flowing from applications and analytics of data to the network infrastructure is something that we think will happen. And that is what we are targeting to see how we can participate in that space. So, yeah.
So I guess if I were to sort of put all this together, right, and think about what fiscal 23 and 24 will look like, the macro challenges seem to be transitory in nature. Who knows what future waves will hold for us, but as of now, they seem transitory in nature. You have put the feet on the street already on the ground, and you're hiring more aggressively. And I would imagine that the customers' network transformation projects will be further along than they were, say, 3 months back, and definitely versus 6 months back. So would it be fair to say that fiscal 23 and fiscal 24, you all would be gunning for a much higher revenue growth, given what we're seeing right now in the funnel? or do you need the funnel to itself to expand to start seeing good revenue growth?
Yeah, I think obviously the funnel needs to expand first, and then we need to convert them into orders and then converting into revenue. So that is the first step. In terms of increasing the feet on street, I called out that we are increasing our hiring and we are rolling out the offers. But all these sales and solutioning team, will have to come on board, get familiar with the offerings and the company, and then they will, it will go through their own lag motions. But we are quite confident, and that is why we are beginning to invest a bit early in the cycle to do that. Right? The attritions haven't helped, but we are quite confident of tiding over that and increasing in the hiring. So with all these, we are certainly looking to see how we can crank up the growth engine to the potential that we believe there is.
Got it. Let me ask the question I should have asked in the first place. I've been trying to ask it roundabout. So fiscal 23, fiscal 24, is it reasonable to expect strong revenue growth? I mean, based on the visibility you're seeing right now, or are things still uncertain?
Yeah, so Mihir, no, I don't want to give a forward-looking statement of that kind. I think we are giving you a commentary around various factors of how we see the deal flow, how we see that we can participate in the transformation, how enterprises themselves are looking to prioritize from application down through the network infrastructure, and all of that is the reality. So and given that commentary and given those investments, given whatever we said, we are quite confident that we will do well. That is the extent to which I can say. I can't call out specifically about a quarter of or the financial year.
Sure, no problem. Okay, thank you so much.
Thank you, Mihir. This brings us to the end of the call. Closing comments from you, Lakshmi, please.
No, I think I've said a lot of things. I only want to wish a very happy new year to all of you. I definitely see 2 consecutive quarters of sequential growth as a good positive sign, and we will stay committed to cranking up the growth engine. Thank you.
Thank you, Lakshmi. This brings us to the end of the call, and you may please disconnect now. Thank you.
Thank you, everyone.
Thank you.